Ethereum is hitting a major time cycle that you want to be aware of, and it's very likely we're going to see some type of correction. There's a few possibilities. Today, we're going to dive into the technical analysis where the fundamentals are already baked in. So if you like today's content, like, subscribe, hit the bell notification. Let's dive straight into Ethereum. The first thing I want to cover today is time cycles. Now, markets, there's rhythms, there's cycles, there's fear, there's greed, there's psychology, all baked in, which includes the fundamentals. What I'm going to show you today is a key time cycle of a maximum time it typically takes to move to an upside. Now, it just gives us a big clue of what's likely to occur next. This particular time cycle is called a low to high. So we've got this low over here, we've got this low over here, and we're going to measure this in time, how long this low to low has taken, and we're going to project that date forward into the future. And typically, when you see a move up, a move down, and then a move up, the typical maximum time taken is this low to high cycle, this low to high cycle. That's what we're going to look at right now. So we're simply going to take this tool at the bottom called trend-based fib time. I'm going to click on this low. I'm going to click on this low. Well, I'm going to double click, and it projects forward. I've chosen the ratio 100%, which is reflected by the number 1. That gives me a massive clue that Ethereum is due for some type of pullback. Now, what we're going to do next is we're going to now look at some of the other elements because we want a holistic viewpoint from a technical standpoint on Ethereum. And there's a few key things that are standing out. And by the way, if you want to learn more about time cycles, I actually cover it as one of the 4 secrets in my 4 Secrets Masterclass. It's free. Take it. It's going to take your trading to the next level so you can truly see what really drives the markets and gives you the edge. So now when I'm looking at this, the time cycle by itself is not a strong enough indication for me to make a decision. I want something called a confluence of events. Multiple things that tell me that this is likely to be a high. So the next thing I want to really bring your attention to is the trend or the momentum of the trend. So the weekly momentum is now overbought. That tells us that the upside is limited, right? So that's the clue. Because if it's hitting a time cycle and the momentum on the macro is saying it's overbought, the daily time cycle is saying, or the momentum is strong bear. Now, I've just put the stochastics RSI on the chart. It's this blue and the red line. That's what this is based on. This plus an extra filter that tells me it's a strong bear downward momentum. So now I want to consider selling. Why? Because Ethereum, no matter what anyone thinks right now, we've had this massive surge recently. Doesn't mean it's guaranteed, but we're likely to get some type of pullback. A couple of options or outcomes on the pullback. We're going to talk about that as well in a bit more detail. But I'm getting great feedback with the trend dashboard. This dashboard over here is a very, very powerful tool. If you want to check it out, you can actually trial it for £1, 30 days. Check it out. I put a lot of training into this, and it just simplifies a lot of things. But you're getting the picture, right? It's not just one element. We need to see it from a few different angles. So we're talking about time cycles today, low to high. We're looking at the momentum cycle, which is now bearish. So there's 2 factors telling us Ethereum is highly probable going to see some type of pullback towards the downside. By the way, that's in the link below. Check it out. I'm telling you, if you put the time in and the work in, this can be a very, very beneficial resource to your trading strategy. Now we're going to do something called price and pattern. So when I'm looking at this, markets tend to move in 5s and 3s, right? But the 3s and the 1, 2, 3 other 5 can tend to look the same. You get what you're talking about. All right, here we go. So this low over here, we got this move up, move down, and then this move up, right? So that's 3 waves. Now, at this stage, this moment in time, even though I got my bias of what I believe it is, we don't even need to know what it is. Is it an A, B, C, or a 1, 2, 3, 4, 5? Right now, we don't even need to know. We can make money in both. So for that reason, we don't want to get cognitive dissonance, as in believe our own analysis or get too caught up in terms of cognitive bias. We can actually just write in it's a wave 2 or a B, 1 or an A. That means right now, this top over here, especially if we get the pullback, even though to me it looks like a wave 3, but it potentially could also be a wave C. So I can put a big question mark here because it has not been confirmed. So in other words, if it's a wave 3 or a wave C, one way or the other, both would require a pullback. What will tell us, and by the way, we're going to go into Fibonacci price in a second, what will tell us which one it is? Well, it really is what's going to occur next. What's going to occur next? So if the price overlaps into this wave structure and it comes down and goes below this point over here, that will confirm is actually a wave C. If, however, we get some type of pullback and it does not overlap and then the price goes above this point, then it's in fact a wave 3. Right? But we can make money in both scenarios. That's the key and the art, because we want to play the odds. So let's just get really, really clear. This is the closing overlap. Let's make this, to make it consistent. I'm just going to change it like this. So we go, okay, so it shouldn't overlap if it is a wave 3. And if it's a wave C, it should overlap. So what we're going to do next is Fibonacci price. And we're going to finish on this. So markets have a relationship. The wave structures have a relationship. And remember, all the fundamentals are already baked into the price. How the crowd feels, positive and negative. The bear market, ETH 2.0, the beacon chain, the EIP, was it 1559? Everything that's been occurring, all the positive and the negative is baked into the price already. So the beauty of technical analysis, it allows us to have a shortcut rather than reading hours and hours of news of positive and negative and trying to come up to some type of consensus. We can just look at the buying and selling behavior. So there's a very, very powerful, I'm actually covering the 4 secrets with you today, so you might not even need to take the masterclass. Still worth taking though. I'm going to measure this movement to the upside. I'm going to project it from here, and I'm going to project a particular ratio up. And the most common wave 3 ratio is 1.618, and the most common maximum wave C is also 1.618. So still, it doesn't tell us which one it is, but it tells us that we are at a key Fibonacci ratio. So I'm just going to do that right now. I've done it earlier. And I'm just going to measure this peak, and we'll take this low over here. And just like magic, and we would have done this in advance as well, but look at this. So now we've got 4 things telling us Ethereum is highly probable reached a local top, and we're going to see some type of pullback. And I'm just going to draw out the possibilities because it's really only 2 raw outcomes, but we can make money in both those outcomes by shorting the market. Really, really important. And that's how I like to trade. So what I want to just emphasize is the 4 things. One is time. We're at a key time ratio, right? The low to high, right? I call it a low to high, right? Really, really powerful. Then we got momentum. The weekly overbought. The daily is bearish, so we want to consider selling, and we can see that over here. That's what this dashboard simplifies for us. So that's 2 things. So we've got, it's called double time frame momentum. Then we've got a pattern position. Looks like a wave 1 or A, 2 or B, 3 or C. So then we've got pattern, right? We'll just call it a pat. Oh, we're right in the whole, I'm writing with my mouse, by the way. Yeah, this is my best with my mouse. All right, next, what do we have? Well, we have Fibonacci price. There's a few other price ratios we can do, but this is the most important right now. This 1.618. So then we've also got Fibonacci price, right? So there's 4 things telling us. Then it's all about risk management and what we want to do and how we want to trade this to the downside. Or another way you can treat this, which is also okay, it just depends on your trading style, is you can just be patient. You can just go, right, I'm just going to wait for the pullback and see, what kind of pullback is it going to be? Is it going to be something like this? And then we can look to go long at this point over here. Now, the 2 main factors I'm looking at right now, as in the possibilities, is really this key point over here, the $13,018 mark of Ethereum. If the price crosses over, if we get a deep correction, and even if it's 3 waves, and it crosses this point over here, if it does that, then at that point, I go, okay, wave 3 is now invalid. It's not a possible wave 3, because if it is, there's an Elliott wave rule where wave 4, so, after a wave 3, if a wave 4 should not overlap into the range of a wave one. If it does, that means actually it's not an it's not a 1, 2, 3. It's in fact some type of A, B, C correction. And then we can be very confident that this low is going to get exceeded and this low is going to get exceeded. But the other outcome is, I'm just going to quickly draw this for you, most common wave fours. If it is a wave four, let me just draw this out for you so you get a real scope. I know I'm doing a lot of detail here, but you have to have a thesis, but you don't want to kind of just see what you want to happen. You want to be able to just see the edge. Most common wave fours do a retracement in price of 38.2% of wave three. In other words, if this is a wave four, this would be a wave three. And the most common retracement as a minimum is $1,432. So in other words, whatever the outcome, we should expect this to occur as a minimum in some way, shape, or form over the next 7 to maybe even 14 days, thereabouts. But again, if it crosses over this point, no longer a valid wave three, no longer a valid wave four, because wave four should not overlap into the range of wave one. Excuse me. And then it just gives us much more clarity. But whichever the scenario, this is what I'm trying to get across to you, is we can make money here and we can make money here. So again, we would write this as a wave one or A. If this occurs, this will be a 2 or B. And this will be a wave 3 or C. In other words, we don't know at this point. If, I'm getting into a bit more detail than I probably should, but if this point over here, if the price then crosses back over here, then we lean on it being a ABC correction of a wave 4. If the price does not overlap and continues to the downside and crosses over here, then we lean on it being a wave 3, right? Hopefully that makes sense. So we're always just playing the odds, playing the edge. We don't know what's going to happen. No one actually knows what's going to happen. It's just crowd psychology. But playing the odds and being the casino, we can make money in either scenario. So take your trading to the next level. Check out the Trend Identifier Dashboard, £1, 30 days. And do, if you like this style of trading, the 4 secrets. We covered all 4 today, right? Double time frame momentum, pattern price and time. But we need to drill those basics. And this masterclass really takes you to another level. And there is some more advanced training available. So if you like today's video, like, subscribe, hit the bell notification. Let's finish on the quote of the day from my book. We are going to go with chapter number 8. And the reason I say what I'm about to say is there's a quote before this quote that I want to quote. It's, everything in life is difficult before it's easy. Right, so we covered a lot today, right? We covered momentum, double time frame momentum. We're looking at dashboard. We're looking at time cycles. Most people don't even realize there's time cycles that exist. The low to high. That's just very rare information. But if you can start to grasp some of these basics, it will just take you to the next level. But like driving a car, which is difficult at the beginning, it gets easier with time. So Henry Ford, he says the following: it has been my observation that most people get ahead during the time that others waste. So this is your opportunity over the next month, over the next year, 2023, and beyond, to get ahead by maximizing your learnings, make them an actual understanding through practice and application, and then put it into your trade strategy. And then all of a sudden, your trading long term will go to a new level.